Good morning, traders. Paul here with GammaEdge. Today is Wednesday, the 26th of April. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Summary for today. Market models are down. No surprise there. The cumulative tick, which is our shortest term indicator, closed below the previous day. This is a continuation down day. And something we call the railroad track pattern, which you'll see on the next slide. It is also continuing down. We are mindful of reversals. We've been in this environment where we could see this. We are actually extended below transition. We'll see that coming up here. And when we get extended, think of a rubber band, we could get a reversal. The overall longer-term market model, most of these have shifted to a confirmed bearish state. The ARCX, which was confirmed up on 411, closed below the ribbon pretty violently. You'll see that on the next slide. We are mindful of that whipsaw up, like we just said. The USC, the TIKRC, which is the NASDAQ, and the TIKRC all finished or are not participating near the lows of the day. They are just not banging anything to the upside here. So very, very cautionary. The TIKSP, which is the S&P 500 CT, is above its ribbon. That is bullish. It confirmed an uptrend last Friday, maybe a little too late. Obviously at risk in the present environment. Market breadth yesterday using the 52-week new high, new lows. We've been saying this for weeks. We have outpacing of the new lows over the new highs. When you see this, and yesterday was very dominant to the new lows, of course, this is bearish. You cannot get out over the tips of your skis for any length in time when this is not confirming across the market. So the market internals in the indices are very poor. Just be aware of that. All of that said, the goalposts, plus minus gamma exposure, 4,300 and 4,000 for the combo complex. For the PM settled complex, which we separate out, it trades differently and it has a different impact on the markets. 4,050 and 4,200 are the goalposts. So just be mindful of those two dynamics. For the 0DTE folks, we have a number of them in the Discord. 4080 is a crucial area today. The moneyness will matter, and pay attention to this. Make sure you know the implications. If you do not, ask. It's important. A close below 4080 makes the 4065 the last support before 4,000. Be aware of that. And then a close above 4100 opens the door to another run at 4120 and potentially 4150. Taking a look at the composite cumulative tick model, there's three signals here. So the shortest one is this bolded white line, and you can see that it has 1 day down, horizontal. It's just a close-to-close measurement, and then obviously yesterday was to the downside. When we take a look at the railroad track pattern, it was pretty choppy coming up into the beginning of the week. We confirmed down Friday, Monday, Tuesday, and you can see that 3 days solidly down. What's ominous is that we've closed below the ribbon. That's going to turn everything. This is the long-term historical reference lines. This is back tested extensively, and when we close below this should be a signal to start increasing your negative deltas. Taking a look at gamma on the ES, we've dropped in both the plus GEX, 4,400 now, down from 4,500. It's a fairly strong move down. It is short-term bullish, as positioning now is to take advantage on a short-term move up. But when we see the overall complex contracting like this, that's not good. And so that is a longer-term bearish signal. Same thing with the plus trans. Plus trans is that strike at which it and all the strikes above it are net positive or net gamma positive, call dominated, and you can see that that has dropped also from 4,400. So we've had calls go in, which has tightened the range here. That is short-term opportunistic to the upside and longer-term problematic to the downside. We'd like to see these things expand upward, and we're not seeing that now. Everything else is unchanged. Taking a look at gamma across the various instruments here. First of all, the PM settled complex, very significant amount of shift relative to where we started yesterday. The out-of-the-money call speculators have lost their dominance. We now have in-the-money puts that are controlling the conversation up through 41.55, 41.60. To the downside, the out-of-the-money put speculators have shown up. We do have a node here at 4,015 and 4,020. And another one down here at 40 or 39.85. Be aware, though, that in general, the put speculators are in control, and if they continue to add to the downside, sensing blood in the water, this will continue to drive these deltas more negative, and we'll be mindful of watching all the way on down here below 39.50 to see what happens to the deltas down here. Looking in the short term, next couple days, maybe into next week, 40.20, 40.25 seems to be the low range. Part of that is because of the delta node. Part of that is just where do we fall off. The strike right here at 4,000, it's pretty important also, and then it falls off pretty precipitously there. 40.80, 40.75, want to draw your line to your eye to this. Very, very strong lines. We closed obviously right here below these. It'll be very important to see how we behave with these today. We are below the transition area. Transition is very tight. When transitions tighten up, we can break in either direction. So for the short term in the PM complex, we're watching this 4100, 4105 area to see if we can get back up into that particular zone. To the upside, although we don't think it's realistic as a short-term expectation, meaning today or tomorrow, possibly Friday, we'll have to see. The 4155, 4160 area looks to be like an area we could push towards, but there's going to be a lot going on to get there. Taking a look at the 0DTE, which is probably more relevant. First of all, we're really lined up very, very heavily on one side of the ship. When we see this line up on one side of the ship, this is a put dominance in the overall structure. You can see that if we remain below this, everything above will be in the money puts that are vaporizing today. In the money puts have a charm which is negative, and that will tend to dampen us down. By the same token, if we move above the 40.80 strike, it'll be very important because now what was in the money now becomes out of the money in dominance. And these charm flows will be supportive to pushing us upward, potentially towards the 4100 strike. And if we can take the 4100 strike, it's going to go wherever the market dynamics push us. Taking a look at the 1DTE, which will be important into the close today. 40.90, 40.95 is the transition range. Pay attention to that. 41.50 for tomorrow. Don't think we're going to get there, but you can see the upper range again. We start getting into some very, very small expiries and minor nodes up here around 41.65, 41.70. Certainly don't think we're going to push anywhere near that by tomorrow, but just be aware of the very, very weak. So the 0DTE action is really driving everything here. 40.65 is that downside line in the sand. As long as we can get above this, if we can push towards that 40.90, 40.95, that will continue to put support underneath us because the charm flows from this will be constructive and positive. If we can't get above the 40.90, 4.95 by the end of day today into tomorrow, and depending on what the 0DTE action is, we could very, very easily see some downward pressure. So we're not out of the woods by any stretch of the imagination. Taking a look at today, tomorrow, and Friday, this is our crystal ball view of the week. That 40.80, 40.75 line set is very, very important. As I said, 40.50 is very important also. If we can get above all of these and push up towards a transition this week, 4100, 4105 will have charm in our sales and pushing us upward and being supportive. If we can't get up above that 40.80 line, it's going to be very, very important for the week. To the upside, 4150 also have the maximum call open interest exposure this week, vaporizing between now and Friday, also at 4150. And when these calls come off, that money has to go somewhere. Taking a look at the combo complex, which is the AM and the PMs all combined into one. Actually a fairly messy structure. Very tight. It can break either way. We're below it. That's important. Here's that 80-75 double line set right here, 40-50 right here, and 4,000. You can see we've had call open interest and put open interest here for some time. The key takeaways is that we flipped a very, very large amount of puts into the complex yesterday, over $1 billion of delta notional and gamma notional into the system. That's significant. Contrasting that, we did not change the overall goalpost. So 4,300 not shown to the upside is the dominant right goalpost, and 4,000 remains the lower goalpost. Taking a look at the combo complex, just stepping back, you can see there are some nodes that are there. We are pretty much in the money, put dominated above, although there are some call nodes which are fairly resilient and hanging in there. If these call holders have any sense that they're going to lose their profits, they will close these, and that'll allow the in the money puts to really start dominating the conversation above us. Below the line here, the 4070 line right here on the yellow, you can see the out of the money puts are present. There are some call structures, and then below this 4025 we still remain in the money call dominant. So the put speculators haven't really started to venture down too deep. I mean, the numbers are weaker than they were yesterday, of course they are, but the takeaway for us is that 4025 4030 line probably is going to hold for the short term. Selling premium down below 4,000 probably is a safe thing to do if that's what you wanted to do. I'm not advocating that you do that. But we don't think we're going to test these 4,000 waters anytime soon, at least not this week, given what we see right now. The final slide of the deck for today, 4,300 is the right goalpost, 4,000 is the left goalpost. Very dominant. I would urge everyone to go back to yesterday and take a look at what we had there. Here's that line at 475, 4075, 4080. You can see it's a double structure. It's we're just below it, so it's going to, where we are in relation to it's going to be important. 4100 right here, 4120 here with some minor noise in the middle there. So this is really what I would call the transition. If we can get above 4120, we do have a chance to make another run upwards, like I said, at 4150, 4175. If we can't get up into that area, we're going to get trapped. We suspected that this was going to be the case yesterday if we lost transition. We did lose transition. We may become trapped. And if we become trapped, that would be indicative of opening your lower exposure and taking advantage of a drop in the markets as, as we bounce upward. So with that, I bid you farewell. If you have any questions, comments, want to come in and kick the tires, go to GammaEdge.us. Upper right-hand corner is a pricing tab. Click that pricing link. Fill out the blanks. Come on in for a 14-day free trial. All the tools turned on, and learn what we're learning. Great group of traders, very active voice session, and would urge everyone at least to come in and see if it can make a difference in how you perceive this stuff. Follow us on Twitter at GammaEdges with an S, and then here on YouTube, two things. First of all, thumbs up. Like that, smash that like button if you think that this is going to provide what you need. It gives me immediate feedback that I'm providing the content that you need. And then two, we want you to subscribe, because when you subscribe, you get notified of when Taylor and I post new videos, and that can be very useful for you in the big picture. We do post this before the open for the members, and would urge everyone to join, come on in, see what we see early in the morning before the open, and go from there. So with that, I bid you farewell. Hope to see you in the Discord. Thanks.